The financial markets are sending shockwaves across the globe. In 2025, both gold and Bitcoin are rising faster than analysts had predicted. Investors are scrambling to understand what's really going on. Is it inflation? A weak dollar? Geopolitical fear? Or the next stage in a global financial reset? In today's video, we're re-diving deep into the real reasons why gold and Bitcoin are surging in tandem and what this means for your money, your future, and the global economy. So make sure you stick around till the end, because this analysis might completely shift your investment strategy. Let's start with the numbers. As of July 2025, gold has crossed $2,750 per ounce, breaking past its all-time high. Meanwhile, Bitcoin has soared above $95,000, flirting with the six-figure mark for the first time since the 2021 bull run. Both assets are traditionally seen as hedges against uncertainty. But what's truly fueling this synchronized rally? The answer begins with one word: distrust. Global trust in fiat currencies, especially the US dollar, is eroding. With the US national debt now exceeding $41 trillion, and with the Federal Reserve cutting rates aggressively to avoid recession, the greenback is rapidly losing its purchasing power. Inflation is back, but this time it's stickier. Consumers are feeling it at the grocery store, the gas station, and when paying rent. And while the official CPI says inflation is under control, real-world prices tell a very different story. This has led to a global flight to hard assets. And gold, historically known as the ultimate safe haven, is once again in the spotlight. Central banks around the world, especially in China, Russia, and India, have accelerated their gold purchases in 2025. In fact, China added nearly 300 tons of gold to its reserves just in the first half of this year. This is part of a broader de-dollarization strategy, where emerging economies are trying to reduce their reliance on the US dollar in international trade. But while gold is being hoarded by central banks, Bitcoin is being adopted by the people. We're seeing a massive wave of retail and institutional investment pour into digital assets. Why? Because Bitcoin is increasingly viewed as digital gold, a finite, decentralized store of value that's immune to central bank manipulation. With only 21 million coins ever to exist, and with nearly 94% of that already mined, scarcity is driving demand like never before. And then there's the halving effect. In April 2024, Bitcoin experienced its fourth halving, cutting block rewards to just 3.125 BTC per block. Historically, halvings are followed by a significant price surge over the next 12 to 18 months. We're now seeing that play out in real time. But this time, the macroeconomic environment is even more favorable for Bitcoin than in any previous cycle. High inflation, geopolitical tension, rising adoption, and regulatory clarity in many countries are pushing Bitcoin into the financial mainstream. Let's not forget the geopolitical chessboard. 2025 has been anything but stable. The war in Ukraine continues to simmer. Tensions in the South China Sea have escalated. The Middle East is once again on edge, with oil prices spiking past $100 per barrel. Global uncertainty is rising and markets hate uncertainty. In this kind of environment, investors don't want promises. They want protection, and both gold and Bitcoin are offering exactly that. Another major factor is technological and regulatory. In the United States, the long-awaited digital asset regulation framework was finally passed in March 2025. For the first time, institutional investors have a green light to fully integrate Bitcoin into their portfolios. That's why we've seen giants like BlackRock, Fidelity, and JP Morgan allocate significant percentages of their assets under management into crypto. This kind of validation is giving Bitcoin a level of credibility it never had before. On the other hand, gold's resurgence is also being driven by fears around central bank digital currencies. As governments around the world roll out programmable money, many citizens fear the loss of financial privacy. Gold, being physical and anonymous, offers an escape. The same goes for Bitcoin, which, while traceable, is permissionless. Nobody can freeze your wallet or deny your transaction. This growing awareness is accelerating the shift toward decentralized money. Another element to consider is the collapse in bond market confidence. Real yields have turned negative again, especially in Europe and Japan. Even U.S. Treasuries are under pressure. Investors are realizing that holding bonds in a high-inflation environment is a losing game. That capital is now flowing into alternative stores of value, and the most prominent among them are gold and Bitcoin. Let's zoom out and look at the psychology behind this movement. People are waking up to the fragility of our current economic system. They see the endless money printing, the rising debt ceilings, the manipulated interest rates, and they're asking a simple question: what holds real value? For thousands of years, the answer was gold. Today, many believe the answer includes Bitcoin as well. But what about volatility? Isn't Bitcoin still risky? Sure, in the short term, Bitcoin is far more volatile than gold. But in the long run, volatility can be a feature, not a bug, especially when it points to upward momentum in price. Gold is the turtle, slow and steady, Bitcoin is the hair-fast, explosive, but also unpredictable. Smart investors are now holding both to balance their portfolios. The bottom line is this: 2025 marks a pivotal shift in how value is stored and transferred. We're re-witnessing the rise of a parallel financial system, one that doesn't rely on central banks or fiat money. Whether you're a seasoned investor or just starting out, ignoring these trends could cost you dearly. Gold and Bitcoin aren't just assets anymore, they're signals that the global economy is transforming. So, what should you do now? First, get informed. Don't rely on mainstream headlines. Dig deeper, ask questions, and educate yourself. Second, consider diversifying. A balanced exposure to both gold and Bitcoin could serve as a powerful hedge against the uncertainty of the next decade. And finally, stay alert. The world is changing faster than ever before, and those who adapt will thrive. Thanks for watching. If you found this video valuable, make sure to hit that like button, subscribe to the channel, and turn on the bell icon so you never miss an update. Drop your thoughts in the comments below. Do you trust gold more, or is Bitcoin your store of value? Let's get the conversation going. Until next time, stay informed, stay empowered.